Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. How can treasurers maximize the speed of Treasury in 2019 and beyond? Craig Jeffery interviews Vice President and Chief Operating Officer Tom Leitch of TreasuryXpress on new methodologies and Treasury systems that will increase speed dramatically, improve efficiencies, and scalability. Listen in as they discuss real-life examples on how treasurers can remove friction and accelerate the speed of Treasury.
Welcome to the Treasury Update podcast. This is Craig Jeffery, and our episode today is the 2019 Outlook, Maximizing the Speed of Treasury. I'm here with Tom Leitch of TreasuryXpress. Tom Leitch is the Vice President and Chief Operating Officer. TreasuryXpress is a rapidly growing treasury management system solutions provider, and in 2018, they grew over 80% in their core TMS management system. Welcome to the podcast, Tom.
Yep, thank you very much, Craig. I'd love to be here.
Excellent. So as we look at 2019, what we expect it to do, what we expect to happen in Treasury technology, you've talked a lot about speed. In prior conversations, you talked about removing friction, making things frictionless, and speed. What do you see as the key themes or primary goals for Treasury as you look out into 2019 and beyond?
Yeah, I think you're spot on by saying speed perhaps is number one. We're seeing a lot of change globally. For example, we have in September 2019 the full sort of rollout of PSD2. Because of that, we're seeing banks in the US adopt and have ready already APIs. So we're hoping, and we're seeing a lot currently, even though it's the start of this year, banks pushing us onto those methodologies of connectivity. Now, connectivity was always one of the hurdles when having a TMS to get it going live and up and running. And now we have these new methodologies. We're hoping that speed will increase dramatically. Now, we have connected to banks already via API. And from, let's say, historic methodology of SFTP and SWIFT, this goes from, let's say, a 30-day process down to about a 10-day process. So we're seeing the speed of the first part of all system integration being connectivity increase dramatically. We're also seeing the requirement from the clients who have seen these changes. They have the necessity to get one of these systems live quickly as well. So the speed and return on investment is also important from the client point of view. Now, speed is part of it, and it can be also bracketed into the idea of efficiency. So no longer can we go out there and say we're going to take, let's say, 4 or 5 months. We're seeing a lot of clients, a lot of consultancies push us to go faster than that. So it's also demonstrating the efficiency of purchasing one of these systems to when they go live has to be tied in together, which of course starts with the integration and then also bringing the product up to speed and then going live. And then a final part of this is, of course, the idea of scalability. You don't want to have a system in place where, yes, you've gone fast, yes, it's been very efficient, but then you're limited after growing into it. So what I mean by that is you have to look at a system that can be taken now that suits your needs, but is also very easy and very fast and very efficient to be scalable. So that might be the fact that you're using, let's say, 5 modules, or you're integrating 5 or 6 banks. There's a lot of customers out there who are acquiring and growing quickly. So a system must also be very scalable, efficient, and fast when they're looking at growing. So you have to think of a system, and we have to position ourselves as a company as being able to be that scalable solution where we can integrate quickly, we can grow and work with the customer, not necessarily just being a vendor and customer relationship, but being a partner. So not only is it looking at how we can grow as you grow, but how we can grow into new functionality. So how can we look at developing things? How can we look at being very easy to use and roll out to new users within the company? So this is what we're looking at for 2019, is how can we have a process that's repeatable and scalable throughout?
That is interesting. So you talked about a few things with speed there. One was, I would say, time to use, getting your connectivity up. Another had to do with speed of adding functionality. And then the other was, integrating other areas of the business or as companies expand to new markets or grow. That's a pretty full-featured view of speed. But I guess there's two questions that I would have for you. Why is that so important, to continue to expand that discussion about why it's so important? And then I would really like to get into the topic about what allows us to go faster, and we can talk about some of the examples of PSD2 or others, but maybe you could start with that.
Yeah, so I think why is it important, and then we'll touch on how it is done. So why it is important? I think we've gone from the era of 2007 having a vast change with obviously recession and companies being at risk, and now with geopolitical things like Brexit on the horizon in Europe and instability, for example, in South America, companies are now realizing that risk is coming back onto the horizon, especially in currencies. For example, we have partnered with eBury to enable customers to manage their FX and their risk abroad easier. So I think people are now looking at, I have to get one of these systems in place quickly so I can manage my cash better. No longer is cash able to sit there idle. We have to start utilizing the cash, for example, in investing or intercompany utilization of lending to internal subsidiaries, and better using that cash rather than going externally to their banks. So I think the reason of why is I think things are now starting to become a bit more, sort of fluctuating. There's no longer that sort of period of certainty of growth or stability. We're now entering what has always existed of sort of ebbs and flows of sort of finance. We have to now look at having a system in place that can address these immediately. And when we say immediately, we of course mean, let's say, getting a system in place from when you sign live in 2 months to better manage your processes and being able to exact and transact very quickly. So I don't think we're any more into that sort of stability period. We're entering a period of what could be considered, fluctuation. And so customers are now realizing the need to get a grip on their cash. As you rightfully pointed out, how is this done? With PSD2, for example, with banks becoming more tech oriented. We're seeing a large number of banks approach us, say, look, we're going to try these new things. For example, a bank in the US, which is global, have brought us on board to trial out APIs with regards to real-time payments and visibility to where those payments currently reside. And if, for example, the payment's rejected, coming back with the ability to change those transactions real-time rather than being rejected and waiting a few days for it to be corrected. I do believe that the API, even though everyone was excited about blockchain a few years ago, as we've always been saying at TreasuryXpress for the last few years, the most impactful thing in the near future is the API. You've seen it hit the personal finance with systems like Yodlee for screen scraping and bringing your own accounts onto your personal finance side into play. We're now seeing those sorts of technology hit the sort of corporate world. So there's a lot out there that TMS vendors can bolt into or utilize. So we shouldn't have to see a huge number of acquisitions of technology. We should see which TMS vendors and providers can go out their way and design technologies to be integrated. So this is the whole point of Treasury on Demand. So what we mean by that is having a system or partner or a vendor that can go out and see what tech changes are happening and quickly adapt to it. So you should really be looking for a sort of forward-thinking provider that hopefully has these already in place, that can then take advantage of the extremely quick-moving environment that is financial technology. We're now seeing Treasury, which was always the last bastion, I suppose, of resistance to this change because it was so rigid. We're now looking at treasurers who are now open-minded, wanting to utilize these and pushing very much their selection towards vendors, being those vendors that are ready now, but also those vendors who are ready for changes in the future.
So that seems to bring up the other category of treasurers being mentally quick and focused on speed. Now, Tom, you talked about what allows us to go faster, and you talked about technology and the use of APIs, versus going through Swift or a secure file transfer protocol method of passing things on. How should we think about removing that friction to gain that speed?
Yeah, I think it's probably going to fall into three parts. Now, the first part is knowledge. Now, these have existed, APIs have existed for a long time. But what has now become more apparent and what everyone is aware of is the use of the API. Now, these APIs aren't just, let's say, between bank and TMS. They're also between intra-systems. So what I mean by that, we've been using APIs with ERPs, so the more forward-thinking ones, like, for example, S4HANA, SAP are now ready with it. We've been working with a few other ERPs who now have these APIs ready. So, for example, let's take what we've been doing at TreasuryXpress, I can speak much more authoritatively around that. For example, in 2018, we have partnered with a company called Hedgebook, which is a hedging sort of accounting software. And we have been able to do that in a matter of weeks because the use of API. The richness of data you can pass down this channel and it being real time has a huge benefit for corporates. Likewise, with our new partnership with Ebury, being able to link via an API will give customers the ability to transact, to pay, and do FX deals in real time. So I think the knowledge of these APIs has pushed us a long way, because 2 years there was a huge concern of using an API protocol rather than using SFTP, or let's say using Swift messaging. So we've seen Swift change with GPI, which is huge for this market, being able to see where their payments are real time. But we're now seeing everyone accepting the API. It's very similar to the cloud adoption. We've always talked about cloud adoption, but there's always been cloud adoption, I suppose, Mark II, which is the widely accepted use of it. So very much knowledge is one part. The second part of this, as I mentioned, is going to be that most vendors now are capable to do it, which is very different and very marked from what was 3 or 4 years ago. And there are still some companies out there that lag behind and some companies are very far ahead. But people are now being more proactive with these. And we're seeing a lot of banks pushing in our way, even though there may not be clientele on that methodology. So everyone's now is looking forward rather than looking how they can manage as is. So it's a huge sort of change in a sort of cognitive design of where does a company or where does a bank or where does a tech provider want to go. Everyone is thinking, let's position ourselves to be suitable, not just for now, but also in the near time and long time. And I still think APIs is a huge area for that. And the third differentiator, as you mentioned, Swift, SFTP will always exist. And I think we're seeing a change in how corporates use this. For example, we've had many customers in the US, South America, Europe, and Asia Pacific who have come to us saying we are going to be taking our own Alliance Like 2, which is very different from in the past. They're now seeing the benefits of utilizing what has now become standard with Swift across corporates, of having their own BIC. So I think this is very much different of what is available and what is becoming more, I suppose, easier to use. And this whole idea of friction and frictionless behavior, as people now are adopting these because they're becoming easier.
So the 3 categories, to summarize those, or to at least identify them: one is the knowledge, the increasing knowledge of how it's used, not just the fact that they've been in existence a while. The second has to do with the capability to make these connections. And the third, I wasn't sure if you were...
Yeah, the third for me is probably going to be the economy of it. What I mean by that is it used to be extremely expensive to get to your own Swift BIC. Now it's becoming easier. And this whole thing boils down across all 3 parts of it, is the idea of friction. Now, if you look for the last 15 years in all research in this market of why corporates have not adopted a TMS or what they struggled with when looking at a Treasury workstation, it always fell into 2 core areas. 1 is cost, 2 is speed. Now that everything has become cheaper and everything has become much quicker, we are now seeing those friction or areas of friction be reduced. So I think very much so the last area could be applied to, let's say, economy, being able to go out there very quickly and very cost effectively.
Excellent. So knowledge, capability, and economy. I think those fall into the category that we would refer to as the democratization of technology, that the capabilities exist. They're available to many more smaller companies. I know that's been a big theme of conversations we've had with you and Tracy and Anise and everyone else. That is excellent. But I'd like you to dive into what are companies going to do and what are they going to leverage specifically?
Yeah, I think companies are going to be leveraging technology in general much more. Now, for example, if you look at 2018, let's say the first half, I spoke to no customer who had their own or was prepared to have their own system installed on their own private cloud. If you look at the second half of 2018, we have seen customers come to us saying, I would like you to install your system on our private cloud. So we're seeing that change already move forward. And sort of what we're predicting for 2019 is many more customers come and say, look, we have this environment, we know it's secure, we want to put more of our systems onto our own cloud, which is perfect for us because we can then give them access, for example, to the database. So they can go and query it and integrate with systems like Hyperion and other items like that. So I very much think for 2019, we're going to see a very big push towards the utilization of also private cloud, but also a massive increase in the idea of single-tenant, multi-tenant SaaS environments. Now, what other customers, of course, will be looking for in the future in a number of areas resides around faster payments and integrating their systems together so they can approve and get those payments out as quick as possible. One area we're seeing in the future is going to be around more use of the XML formats, ISO XML. We're seeing more and more banks accept that. It's becoming much easier for us to map country formats into that specific one. We just add a few additions to it and off you go. So, for example, what used to take 2 weeks is now taking 2 or 3 days for formatting the payment files because many more banks are now accepting these formats. And one of the big areas we're seeing, and we have extremely high hopes for in 2019, is the concept of virtual account management. Whilst this has existed for some time now, no one has been able to crack the concept of having a virtual account management system integrated fully with a TMS. So for the extreme version of this, for example, you could go down to one account in your banks and then have an entire virtual structure below it where you can do POBO and ROBO. And you can do all of this in relation to your ERP. So you can reduce vast number of bank fees and speed and manage your own accounts across your whole company through a virtual account management system. So I'd say those are sort of the main areas what we're seeing come into 2019, along with the idea that, as you mentioned earlier, that the democratization of TreasuryWorks system or Treasury Workstation being used by all customers. So we've seen a marked rise in the small customers come on board, select us through a due diligence process where they invite vendors in to talk and see what their companies can do and how they can help. So it's no longer, and this has been a huge change over the last sort of 2 years, no longer is it only a system that large companies can afford or international companies need. Domestic and small companies are now adopting these TMSs. As you rightfully say, we have democratized what has been going on through speed and efficiency, but also through cost.
Excellent, Tom. I like the discussion about the virtual accounts and pay on behalf of, or POBO, and receive on behalf of ROBO. There's probably a lot more I'd like to ask you, but we'll have to leave that for another podcast or discussion. Thanks for your insights in terms of what companies have been doing, how that's changing, some of the thoughts on private cloud, faster time to connectivity, scalability, and some of the changes on the workflow. Very excellent. Thank you, Tom.
No, thank you very much, Craig, for having us. Always a pleasure. And look forward to hopefully doing one again on the future where we've changed the entire treasury industry.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.